Okay, this strategy is called the Trendline Breakout strategy with the 200 EMA. It's a moving average, 200 exponential moving average. By trading setups and rules, price must be traveling above the 200 EMA. Therefore, an uptrend market is in progress. You draw a trend line and wait for its breakout. A breakout happens when the candlestick breaks the trend line and closes above it. The candlestick that is called a breakout candlestick. Place a buy stop order 1 to 2 pips above the high of the breakout candle. And if you want to take aggressive entry, then buy immediately at market price as soon as the breakout candlestick closes. Place your stop loss 2 to 5 pips below the breakout candlestick, and if you think the stop loss is going to be too close, then consider placing it 1 or 2 under the nearest swing low. Your take profit levels should be 2 to 3 times the aim of the previous swing high. Here's the buy chart. As you can see, we are in a uptrend. There you draw your trend line. This is the 200-day exponential moving average. As you can see, it's very accurate, this 200-day. I think a lot of bank traders are using the 200 there. So there's the trend line. It bounced off the 200, pushed through, and then the next candle opened above. Now that is a good buy, because usually I see that one pushed a little bit through the trend line. Usually that candle will just come back, just touch that line, and then push back up. That is an extremely low risk trade to take, because you can, as soon as it hits the line, even if it pushes a little bit through, as soon as it goes above the line again, then you can enter with a really close stop, because it won't pierce that line again. I can show you millions of examples of this. This is a really good risk to reward trade. Okay, so your stop loss is there. You've entered there or here. So it's really close. So you can go to the next high, which is there, and you can calculate is that from there to there 3 times the value that you entered or more. And here's another one. There they say you shouldn't be trading because the breakout candlestick is too long, and on that I totally agree. It's a little bit far away from the 200 as well. I totally agree with that one, because where you're going to enter, you're going to have to enter as soon as it breaks it, but you don't know if it's going to close above the line or not, because it can push all the way there and come back and closes under here, which isn't the same signal. And here's another one. As you can see, then it pushed through. The next one closed kind of on the line. I would not have entered on that one. There, that candle tested the line and then pushed up and closed above. That's your enter candle. You could have on the line here. You could have gotten in, but that candle, you weren't sure what's going to happen there. That is a better candle for a buy. And then if you see your risk to reward from that line to that line, this is about 5 to 1 risk to reward. That's what you want to trade. You want good risk to reward trades. Then sell trading setups and rules. Price must be traveling below the 200 MA. Therefore it's in a downtrend. You draw a trend line and wait for its breakout. A breakout happens when the candlestick breaks the trend line and closes below it. The candlestick that does that is called the breakout candlestick. You can place your stop order 1 or 2 above, and then your profit target needs to be 2 to 3 times. Let's have a look at the examples here. See, it's below the 200. Let's use this one because it's close to the. Although this one is not a good entry for me because that candle is way too long. That one's also way too long. Also way too long. This is not good entries for me. I'm going to show you guys on the live chart. You can enter these ones. As you can see, most of them worked out. if not all, but I want to show you guys more safer ways to enter, which I'll do later. But this is the concept. You get the trend line. If the trend line is broken close to the 200, then you can enter. Although I'm saying these ones are not the best. This one is better because you want risk to reward. You get a long candle like that. Where is it closing? It closes here. Here they say sell just as it broke through. You can do that, but how do you know if this candle is going to close underneath that line, or is it going to push through and then come back above it? You don't know. So this is not good entries. I'm going to show you guys better entries on live examples.